Hello everybody, this is Breaking the Mould, our regular market review with me, Clara Hermit, and our investment research director, Russ Mould. We're back for another week. Russ, what's the fuss?
Well, the fuss is all going to be about Easter, isn't it? Long holiday weekend, lots of chocolate for people, a bit of a chance to have a relax. Don't like chocolate, rather eat a pork pie or a piece of cheese, so I'm not in the least bit interested in that part of it, and we've still got lots of financial market stuff going on at the same time, and in fact we're going to be talking about, fuss-wise, booze, oil and carpets.
None of which to me sounds as digestible and lovely as a chocolate Easter egg.
Oh, true.
But can we start with the booze?
All right, then just to sort of get things off to a gentle start. We've got trading statements from SABMiller on the 15th and Diageo on the 17th. Big, heavyweight, FTSE 100 stocks. Now, SABMiller, shares have lost a bit of their fizz in the last year or so. They've slipped down. Bit of a rally recently, but the third quarter statement wasn't fantastic. So the fourth quarter one coming up, they'll be looking to reassure the market on three things. One, lager volumes in America and Europe. Two, is weakness in the South African rand hurting profits because South Africa is a big country for them. And three, volumes in Asia and Latin America because you've had all these worries about emerging economies, are they coming off the boil? And that has definitely weighed on the share price very, very heavily. Overall for the full year, even though SABMiller owns very well-known brands, Grolsch, Peroni, Amstel, Castle Lager, analysts are looking for a 2% drop in earnings per share to around 237p.
Okay, so Diageo though, isn't that more about spirits than beer?
Very good, yeah. I mean, Diageo does own Guinness, which is wildly popular in Nigeria. Bit of an emerging market risk there as well at the moment. But in the end, it's more about Johnny Walker, Bushmills, Baileys, really, really big names, big profit drivers for the company. But again, even though it's a different business, very similar themes. The market is worrying about emerging market exposure. Is the growth coming through? Is the stock a bit expensive? And the shares have again been quite weak. So with its third quarter statement, Diageo will be looking to say, well, hopefully there's a little bit of an acceleration because in the first half, total sales are up 1.8%, led by America and Europe, with the US, with emerging markets up only 1%. Nothing to get wildly excited about there. So again, for the full year, analysts are also looking for a 2% drop in earnings per share to around 102p. So if you get a sense that things are picking up in the emerging economies, stock might be open for a run. If not, people might move on.
Right, so that's the booze.
Yeah.
Should we talk about oil?
We're already oiled up with the booze, aren't we? But we'll move on to the crude oil now, Brent, at about $107 a barrel, firmly underpinned by unrest or concern about Ukraine, Crimea and Russia. And also there's an Algerian presidential election coming up, and Algeria is a big producer. People don't quite know what's going to happen there. But the big problem for the oil companies, it sounds great, firm oil prices, but actually the cost of getting the stuff out the ground's going up through the roof because they're having to drill in deeper water or work in more inhospitable countries. So that's a bit of an issue because they're not really making as much money as the shareholders would like, and they're now saying, well, you're not doing a great job of investing the money. We'd like it back in dividends and share buybacks, please.
So that sounds like a big problem, really. The spending has to go up, but investors want the spending to come down. So what's the solution?
Well, at the moment, BP and Royal Dutch Shell are giving the investors what they want. Lower capex, higher dividends, more share buybacks. And you're actually seeing the oil service companies feel the backlash from that. In the end, there are two solutions. Either the oil price goes through the ceiling, and we all pay more at the petrol pump, I'm afraid to say, or the oil services companies come up with fantastic solutions to make drilling more efficient and cheaper. Lots of very clever companies out there, but they're all having profit warnings right now because of this short-term spending cut. GTEC's an example from a couple of weeks ago. We've got Hunting with a trading statement on Wednesday the 16th. It'll be really interesting to hear what they've got to say. Profits have been brilliant for the last 3 or 4 years. 2013, they sort of flattened off. Market's only looking for 4% growth in 2014 because of this capex issue. They're very busy in the Gulf of Mexico, Asia and the North Sea, so a good proxy for the whole industry. I'm really looking forward to hearing what they've got to say for themselves.
Definitely. So after all of that global activity, I'm guessing that our final subject of carpets brings us a little closer to home.
Home sweet home, domestic bliss, yes. And we'll actually talk about Carpertright, one of the biggest names on the high street, run by Lord Harris of Peckham. It's been a profit warning machine. 3 trading alerts in the last 6 to 9 months. Harris has been blaming tough trading in the Netherlands and the fact the UK has taken longer to turn around than he thought, which is why the Carpertright shares have gone through the floor. Boom. Yes. So what he's got to try and reassure people on is the Netherlands, UK, well, we've got Help to Buy. You've got huge house price recovery. That, in theory, might be of assistance. That's why the market's looking for a big jump in profits next year. For the year that's just finishing, and Harris will be speaking on the 23rd, you've got profits of 3.5 to 5.5 million quid penciled in. The market's looking for 10.5 for the year after. That's a big leap. That's why the share price have actually now gone on a bit of a roll after its previous tumble. Again, we'll have to see, but Harris is going to need to be quite chipper to get the shares going again, I think.
Okay, Russ, we'll have a lovely Easter
And
weekend.
you too.
Even if Russ isn't going to be eating Easter eggs, I will be eating my fair share, and I hope that you do too. Have a great Easter weekend. We'll be back with you in 2 weeks' time. Bye-bye.